Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan. He's a co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. It's great to be here.
All right, so we're talking Kroger. I mean, this stock just hit its all-time high about a month ago, Landon. It's had a good run. It feels like, if you look at Walmart, they've done really well by pivoting to grocery. Target left in the dust because they didn't pivot hard enough. But it feels like, is this inflationary pressures where people are actually going back to the grocery store, not going out, and maybe they're having to cook more at home? Is that one of the reasons we've seen a resurgence in this area?
That's exactly what our data shows, is people are starting to dine at home, cook their own meals, pay less, rather than dine out and pay the higher prices. In fact, of course it's more expensive to go out and eat, but it's actually, the gap is widening. If you look at the data, the numbers for dining out, the prices have gone up 3.9% year over year, whereas the prices of groceries and eating at home have gone up just 2.2%. So of course it's more expensive, but that gap is widening. So those people who are feeling pressure, who are looking to save money, are eating at groceries, eating at home even more so. And yes, you mentioned Walmart. They're sort of their leader here. Also, Dollar General, we saw some strong news from them, strong report from them in the same category. Kroger's doing well. They're behind the pack a little bit here. They're kind of in the middle, but they're on the right side of the bar, right? They're plus 4%. Instacart, Amazon, Costco down a little bit. Now, of course, Amazon's got a lot of other things built into that, but still, and so does Costco. But still, you can kind of get a feeling for where Kroger's sitting here. They're doing better, but they're not doing great. There's definitely more inflationary pressure. People are looking for lower prices. They're buying larger packs. They're buying fewer snacks, fewer alcohol. And Kroger's responding. They've lowered prices on a couple of thousand items. They're pushing their private label brands, which are cheaper, and also, for a win for them, they have higher margins. They've talked about how the tariffs are unlikely to affect them much. If so, it's going to be mostly in fruits and vegetables, but they're eating that right now. They're not, they're not raising prices on fruits and vegetables. I think a lot of people comparison shop that, and they don't want to appear more expensive, so they're holding the line and just kind of taking less margin on those items. So, we've seen a good move for Kroger here as far as the consumer, and of course a bad move for investors. If you talk about the last few weeks, yes, all-time highs, but then, we've pulled back quite a bit from there. We're down to 66. So, it was on a nice uptrend for, about a year, and that hit that about $75, and now we're back down to 66. So I think that investors are eager to see what's going to happen on this earnings report. And I can say that, just based on the data, the pullback was a little bit warranted. Their growth is slowing, but I think we're getting close to oversold territory here. And so, I would lean bullish going into this, mostly because the data is decent and the pullback is pretty strong for a name that doesn't usually move this much.
Value-seeking behavior is one of the terms that seems to be everywhere when you're talking about grocers. And you made the really good point. Don't listen to us. Look at Walmart's data. Look at Dollar General's data. That's what their data says. Kroger should participate in some of that. But Landon, there's another topic here, which is their numbers were skewed by gasoline sales. And a volatile part of their business is gasoline sales. Here's the numbers. They went from $4.96 billion to $4.34 billion, down 12.5%, 2.7% drop in gallons sold. So if that number, which is always volatile, as you know, if that number snaps back, you're going to have a recovery, because the rest of their numbers, their sales were actually pretty strong. The number got skewed by the fuel oil sold. So if that number gets a little better, Landon, you could see that snap back. And the other thing is, it's right at the 200-day moving average now. So if it's going to firm up, if it's going to start to recover, it's going to start to recover from right here.
Right. When you talk about value-seeking behavior from consumers, I think this is value-seeking behavior from investors. I mean, this is a strong company that performs well. It's obviously pretty defensive stock. People need food, no matter what. And and we've got some macro things coming in their favor with the, it's more expensive to eat out, and that gap is widening. And so with this pullback, I think there is a bit of a value play here in Kroger. As far as the fuel goes, I don't know if investors are seeing that as sort of a one-off or a trend reversal. What are they pricing in? Are they pricing in the fact that was a one-off and we expect that to bounce back? And if it doesn't, then there's big concerns, or are they worried that that's a shift in the other direction, and if it does bounce back, and then they're pleasantly surprised? I'm not sure what the expectation for Wall Street is on that one. I would guess that they priced it in as kind of a one-off fluke with some volatility in there, and they expect it to come back. But overall, I think Kroger is, it's a strong company. We've got good data on them. Not great, but good data. I do know that their e-commerce efforts have been really strong. They're up 15% on a year-over-year basis there. Whether that's delivery, that's curbside, they're taking advantage of different trends. They've got their finger on the pulse of what people are doing. Like one, for example, is that there's been more of a protein shift. One of the things that we do is we track, how people eat, what they're interested in. We have clients who, we have some clients who are food manufacturers, and so they want to know what people are eating. And so protein is starting to move in that direction. That with their Simple Truth and their private selection brands, they're pushing more protein, and that's, I think, helping sales as well. But yeah, just looking at this chart, I mean, I'm normally a buy high, sell higher guy, but this is pretty compelling for buying at the bottom. You're hitting that 200-day moving average, like you said, and the company it's doing well. It's not turning the wrong direction. When we look at our earnings score for this one, it's a plus 17, but I want to note that score was calculated on Sunday. And since it's moved down a little bit, I would guess that we're probably plus 20 or so, which is where we pulled the trigger. So I think that you can take a bullish bet on Kroger here if you're interested in playing it. If you're a long-term investor, I don't think that this is a bad place to get in. It's just, it's low compared to where it should be. Maybe just a little bit, like I said, a little bit oversold at this point.
Landon, when I was looking at the one chart, the web visits versus the stock price, I mean, that's kind of equal there. And then, your web visits is typically above the stock price, but now we're kind of right there in the middle. Does that send up any warning signs to you guys?
I'd like it to be higher. That's one of the things that's a little bit not concerning, but I mean, remember that number is up about 4% year over year. So this isn't the highest part of the year. It is around the holidays. People are obviously shopping more, cooking Thanksgiving and Christmas and all that. But it's up year over year. It's not as strong as it was. It's not doing numbers like Dollar General and Walmart, as you can see. So it's a little bit like I said earlier. I think the pullback is somewhat justified, but I'd say it's justified to 68, 69. Like this is we're getting a little bit too much. And I know it's you're talking not too many percentage points, but 5 percentage points difference between 69 and 66, but still, that's a big number when it comes to a company like this that just doesn't move that much. And so I think you got a potential value play here. And on the earnings report, I think you're going to have the potential for a turnaround. It's a low score at plus 17 or plus 20, but it's still plus, and it's on the bullish side. I think I'd be willing to take a shot on it.
All right, yeah, 11% pullback from those all-time highs that we saw just last month. All right, great stuff as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan. He's a co-founder of LikeFolio. Kevin, that was going to be one of the things I pinpointed was